In this video, I'll be discussing 3 stocks that I am personally watching going into this week, as well as taking a look at the US stock market and whether or not we could potentially make it back to those all-time highs in the next few weeks, and maybe more importantly, if we have the potential indicators to tell us that we could see fresh new highs that actually sustain themselves on a longer term basis. Welcome back to my channel. I am doing this, this is my second video on this new channel. I've been on YouTube primarily doing commodities, indices, and Forex on my main channel, Trader Nick, but this new channel is going to be all about stocks, and in this week, I'll be showing you a couple stocks that I'm personally watching. Like I said, let's start out by taking a look at the index view. We're looking at a weekly chart perspective, and what we can see is the S&P 500 has confidently taken back its longer-term moving average here to the upside. So if we take a look just real quick at the moving averages, we did go back and test the 100 weekly moving average and have now confidently closed above all 4 of our major long-term averages. On the daily chart, you can see we've also taken back our 200-day moving average, and we do seem to be confidently putting in higher lows and higher highs in this chart. In fact, the price action looks very constructive in my view for continued pushes back towards those all-time highs. We've talked about this quite a bit on my recent content on, I guess, both on my channels, but the put to call ratio recently during all of the craziness in April when people were very scared around the Trump tariffs, stocks sold off big time, and we saw a huge demand for puts in the options market, suggesting a lot of fear on the investor side. We also saw that in the AAII Investor Sentiment Survey, showing a lot of investors were very bearish in recent months and have now kind of flipped back to a little bit more neutral. But let's not get ahead of ourselves because we are still seeing more bearish sentiment than bullish sentiment. So I'm watching this. I'm watching some of our sentiment indicators as we go into this week. But from a pure price action standpoint, I would not be surprised if the SPY is headed back to those previous all-time highs, right? So I think it is a fair thing that we at least go back and test those areas. But there is something we need to think about, which is a lot of our main catalysts in recent times are behind us. That is until this week, where we have NFP. Now, what do I mean by catalyst? Well, we had earnings from all the companies, which came in pretty good. That's why we rallied here, or a lot of the reason why we rallied here. We also had some soft inflation numbers, and basically some things with Trump and allies. Negotiating trade had been going okay. That is until last week where we saw a little bit of trauma around U.S. and China relations again. But this week we have jobs numbers. That will be really interesting to see if those could be potential catalysts to drive the overall stock market back or even beyond those all-time highs. I think the market wants to see some confidence in the labor market, as people were really scared that all of the inflation stuff, I'm sorry, not the inflation stuff, the tariff stuff could cause us to have kind of a big old recession. Anyways, moving on, we can also take a look at the QQQ, which is the NASDAQ, just to get an idea of this one. Looks pretty similar. You can see we had that big gap open here back in the early portions of May. And then now what we see, that was the China announcements and the positive constructive moving forward there. We actually even retested that same area and then bounced off of that area. And price action, like I said, still looks constructive to me on the major indices level. When we take a look at the moving averages on this one as well, you can see we're back above that 200-day moving average, and most of our moving averages look like they want to turn to the upside. So that impenetrable uptrend that was over here did get challenged in all this, but what I think is a good sign from a price action perspective is that we didn't see any sort of major follow through and break of those lows like so many investors and traders thought we would see. So anyways, I do like on the index level how we're looking here. We have the RSP. This is the equal weighted S&P 500. This one also had a pretty steep drawdown. You can see it was a 20% drawdown. That was actually slightly less than the tech heavy kind of S&P 500, right, where the standard SPY weights a little bit more heavily towards those big Magnificent Seven. RSP is an equal weighted version of the S&P 500, and it gives me, in my view, a pretty good indicator of the actual performance of the average S&P 500 stock. I want to show you another chart here that I thought was interesting. We can take a look at the stock box, which is our company's primary stock market tool. We have an advanced decline chart or a market breadth chart that we've built here. And what we can see is that we can see the percentage of stocks in our system that are above the 20-day moving average, above the 50-day moving average, above the 100-day moving average, and above the 200-day moving average. From a big picture standpoint, we look pretty good here. You can see that most of our stocks are above the 20 and 50-day moving average, and then about 56, 55% of the 100 and 200-day moving averages as well. Noticeably, also what we can see here is we've broken this down by sector. So companies within the financial sector, and we can also see industrials performing very well here, seem to be some of our strongest. Comm services also pretty strong. And then when we talk about some of our more weaker side of things, you can see healthcare here, energy, and then also I guess consumer defensive is middle ground. But healthcare actually kind of falling a little bit behind in terms of the recent rally back, at least on a big picture standpoint when we look across the stocks in our system. So just something to think about here. We scroll down, we can also see, if I get all this off my page, the underperformers versus the outperformers. These are just stocks that are, really hitting it on all cylinders versus the ones that are really missing. No surprise here that we have the notorious UNH underperforming pretty big time here, with that stock getting absolutely cratered. And people have asked me about this one. Is this one a potential buy? And I do think that, from a long-term perspective, could this be a great stock to pick up? I personally think that you could do okay with UNH. And just pulling up the income statements here, what you can see is that we do have a company here that has very, very solid, constructive, rising revenues, but has recently gotten hit hard in the news and people uncertain about their future, especially with the whole polling guidance, and people are worried about it. I honestly think that this company, from a financials perspective, looks really strong. And on a long-term basis, I don't hate the idea of potentially picking up some shares of UNH. So is this a falling knife at this time? Yes. This is not actually one of our 3 stocks, but I just wanted to pull it up because it is a very hot topic. So with that said, let's take a look at our first stock. So the first stock of our list here that I really like is going to be Alphabet or Google. This is a company that I've owned off and on for the last, 5, 6, 7 years. It's a company that I really like. And the reason I wanted to pull this one up and talk about it a little bit is because it's come under a lot of scrutiny recently. It's trading just around its 200-day moving average. While we said earlier that many other stocks, are well on their way back towards those all-time highs. Take a look, for example, a company like Microsoft or a pretty big-sized competitor to Google. We could also pull up Meta, right? Meta's bounced back very sharply. Well, when we take a look at Google, what you can see here is the price action has been much less impressive here recently. We are still off of our highs here on this stock by about 17%. That's, in drawdown, had you bought the highs. If you were to buy here and it does go back to the highs, that's a 20.5% gain. So the question is, why is Google under scrutiny here? Well, there's a couple reasons. Google in recent years, it comes down to one word: search. Search is the primary kind of cash cow for Google. And obviously, as many of you guys probably are doing too, a lot of us are using AI chatbots to accomplish a lot of the things that we used to use search for. So for example, a lot of people are going, they had been going to search, and now they're going to ChatGPT or Perplexity or what I use personally, which is Grok, right? So you have all these other ones that people are now saying, well, we no longer use search because search just gives us links to look through. These ones give us the answer to things that we want. So as you can probably imagine, that is a big issue for Google, which makes up a ton of its profits from Google search. Why? Because that's how they sell ads, right? So they're an advertising agency on steroids. That is, they're, the biggest advertising platform in the world, right? Google search. So what's the issue here? Well, if people continue to use these new products instead, doesn't that really kill the idea for Google? So why would I want to be a buyer of Google? Well, again, it is a little bit hard to defend a stock when it's gotten, really scrutinized for that reason, and that is a valid reason to be concerned. However, because everybody is so scared about Google losing its search dominance to these new chatbots, what we can see here is that the price to earnings on this stock has, in my opinion, become very cheap. The overall net revenue and net income of this company continues to rise despite the criticisms. We've still seen search volume overall doing quite well and growing. We've also seen for Google, YouTube become an absolute monster of a product and continue to rise and grow and become a bigger and bigger piece. There are many, many components to Google, not just search. There are other things, but search, of course, matters the most because it is their biggest profit producer. They have a huge amount of free cash flow. The price to sales looks good. And when we look at their historical valuation, somewhere around a 24 to 25 PE, with it being down during the lows, it's bounced back a little bit here, down somewhere around a 17 or 18 PE for Google on a trailing 12-month basis. That's a really, in my opinion, attractive entry price. And so for me, when I look at Google, I do actually think that I want to be a buyer on weakness. So if this stock gives me a couple days down, I am going to look to add more to my existing position in Google. And I do think that there is long-term potential for the stock to continue to play ball. Why? Well, there are many things that they are doing great on the AI side of things. Gemini is becoming a very strong applicant into the mix. Of course, they're still sharing the pie with more companies, but I think that that pie could get very big, and I think that their resources to invest and to buy companies that look prosperous in this AI trade and race, I think makes Google a contender. And with a very low PE ratio and basically the company's valuation being relatively okay compared to some of the other Mag 7 stocks, this is a humongous company that I think you can make a little bit better of a decision buying this one. Personally, this is, as always, not financial advice, but I think the risk to reward on a Google actually looks quite good compared to maybe buying the high flyers that are priced very, very expensive. Now, I also own Meta, so I'm not saying I only want Google and that Meta is a bad pick, but Meta is a crowd favorite, right? So this one is very, very differently priced. If we were to compare Meta, for example, and pull this up, and maybe this will actually be a feature that we add to the stock box at one point, will be a comparison feature of Meta versus Google, etc. You can see it also fell off, but in its average kind of price to earnings ratio, you're talking more of like a 26, 20, 27. Still not terrible, and actually, Meta is also a company that I quite like the idea of buying more of. I own a good bit of shares, but again, we can take a look at some of the other names out there, like take a look at Apple. So if you ask me, do I want to buy Google or do I want to buy Apple? I'm picking Google every time right now because, again, I have a PE ratio here for Apple that is much, much higher, talking about 33, 30, somewhere in that range, depending on what price action is doing for the day. But the point is, when I compare something like an Apple, which is another ginormous conglomerate company, I actually much prefer the idea of owning some Google shares. So that is our first stock of the day that I'm watching is Google on weakness for further adds to my existing position on this stock. We can also take a look at our next stock of the day, which is Robinhood. So Robinhood is a company that I've done really, really well with. It is a good size position for me, and I can pull it up now actually within my brokerage. So here is Robinhood. So Robinhood, I have an existing position on this one, but the reason it's a pick of the week or something that I'm watching is because I have an existing position on Robinhood, which jumped on Friday, but I also have calls that I've sold going out to the 13th of June. That's about 2 weeks away. $75 calls on Robinhood. I'm watching this one close because we're sitting at an all-time high. So this is a bit of a breakout alert here on Robinhood. I'll be curious to see if we can actually get through this previous all-time high, which we're sitting right around. Reason I sold this call is because the stock has done so very well in such a short period of time. And in my view, this stock can continue to do quite well, but I wouldn't be surprised if we kind of consolidate and wait a little bit. So I actually decided to sell calls against my position. And if this market just rocks, if the stock just rockets through this 66 level of resistance that we're sitting at, what I'll personally do in that circumstance is I'll let it get called away, but then would be looking for any weakness to add back and buy back into the shares. So it's a bit of a active trade here for me. So what I'm looking at this week with Robinhood is whether or not we can actually take out those previous highs, and those are, I believe, all-time highs for Robinhood. Yeah, it's done really well. This is a stock that I like very much for the long term, and I'll give you my quick pitch as to why I like Robinhood so much. So Robinhood is where I personally got first invested as a young, I guess old millennial or tail end of the millennial phase. I was born 1996, but I was looking at getting into investing years ago, and Robinhood was the go-to app for everybody my age, and I think it still is for a lot of beginners. And so I loved the product. And over time, I think there's a story there where I still, to this day, even though I trade on other brokerages for some of my more active stuff, I still retain a brokerage account with Robinhood. It is so simple to use. The UI is amazing. I love the software. I love the product. And I love their marketing strategies as well. That being said, not only that, they're also getting into some kind of pseudo betting markets as well, which I think is a very lucrative possibility for them to expand into. Betting on events and stuff like that, which is a very profitable entity. So I love the stock for the long term. It's also growing dramatically. It's doing quite well over time, and I think that it has a lot of potential. So what I'm looking for with Robinhood is you're sitting at a level of resistance here at 66. I'd either be looking for a break and a possible retest of this area to add new position if I get called away, or just to add shares if I don't get called away. And then alternatively, if we do see a drop back for a couple weeks, I may look to pick up some shares in Robinhood again, or expand my position, get a bigger position filled if we can go back and test some of these longer term levels of past resistance turned into support. Around $49, $48, I really like that as a possible pickup for Robinhood. Last one is a bit of a boring one. It is American Express, which is a company that I think is just an easy one for me to pick up whenever it is on sale, which is what I did, around $270 a share. Actually, what I'll do is I will pull up my position on AXP. And so I want to get more shares on this stock. I do have a good size position already, but wouldn't mind adding to it. So I got around, well, actually I said 270. The reason I got it here is what I actually did when I got these shares is I sold or wrote a put. I shorted puts at 270, which is right around here. And with the premium, I got assigned these shares. So with the premium of whatever that was, $12 or whatever in premium, I actually got assigned the shares around $258 per share. So I do own the shares now, and what I'm looking for on this one is any signs of further weakness. Now, why do I like American Express so much? Well, this company caters to the high-end wealthy consumer. This company has done very, very well for a very long time. It is not new to the game. It has dominated on the credit services for some time. They have nice, steadily growing revenue. This is the sort of stock that I really like and don't mind holding, sleep easy stock. And a little bit of a dip in the PE ratio here with everything that happened in Q1. So when I say I'm watching this one, I'm watching specifically to see how this kind of holds up in the coming weeks. If we do get a pullback in the markets, American Express, Google, and Robinhood would be some stocks that I'm personally watching. If you enjoyed this video, make sure to hit the thumbs up button and subscribe. But before you go, let me also let you know that if you're not in our Stocks and Options free Telegram channel, make sure to come join us. We're posting bonus content in here. I'm sharing charts of the day, things like that. There is a link in the description down below. If that would be something beneficial to you, I'd highly recommend you come join our free Stocks and Options Telegram channel. Thanks so much for watching. We'll see you next time.